This is our Forex blog for May 30th, 2014, and there's two uh, easy ways to trade with our software. One is use the currency indexes and currency meters. Find a currency that's weak, such as the dollar. It's underneath its hourly moving average, it's making lower lows, and look to sell that versus a currency that might be stronger, like the pound today, for instance. So you have a weak dollar, strong pound. Now, most people recently who are signing up with us are very excited about having our Forex signals because these show you very high probability places to get in. We use Fibonacci profit targets, Fibonacci retracements, Gann angles, trend lines, and a lot more. And we also try to wait for the selling to be over before buying, and unfortunately this one didn't take off immediately. The second trade, did go up 30 pips. This one you might have made 4 to 5 pips, and you had the opportunity to make 15 pips on it. But for traders who don't know what they're doing, it's a great way to find trades. And notice it got out and flipped and went short up here at the fib target. Actually, it's not the fib target of that move. It's probably the fib target of this one. Yeah, so that's why it got out and flipped and went short. Here's the euro, in case you're wondering how I did today. Small loss, 4 pip loss, 3 pip loss, and then we had about a 12 pip win, maybe 13 pip win, 20 something pip win, and break even. But even without our signals, using our currency indexes and our currency meters, which I like the perfect oscillator because the plus 80 levels tend to be when the price is going to slow and reverse. And when you have a trend that's up, you can look to get in when it hits the lower Bollinger Band off of this area because the trend's up. And if you look at that, you can see all these areas to get in, and price resumes the uptrend most of the time. So if you trade that strong pound versus either the weak dollar, and you can see the yen is also weak, using our I'll just bring up the pound yen. You can use any time frame chart. I like the range charts. Strong pound, weak yen, and basically there's two methods for manually trading. One is kind of just wait for a pullback, and when it looks like it's not going down anymore, get in with your very tight low risk. And whether if you're a scalper, you can get in and out, small win, small win. Another entry is a multi-hour rectangle pattern breakout, and then at that point you have your fib targets. And I plan on releasing our Gann tool soon. I don't have time to do a video on how to use it, but I'm going to showcase it in the Forex blogs. For people that do the work and watch these videos, you'll understand how to use it. And when you know a currency like the pound strong and the yen is weak, and when you clearly see it walking up one of these Gann angles, it's just a very high probability place to be getting in, right here, because you can put your stop right underneath the low. This one didn't quite hit it. This one you could get in right at this level and risk just a ridiculously tiny amount. And by using the Gann angles along with our currency indexes and so forth, you can really pinpoint high probability trades. And of course you can also use your Fibonacci areas as well. And for this last wave from here to here, the fib targets up here are a pretty decent place to get out of the trade. And usually when price goes beyond the 1.618, it's definitely going to run out of steam. And you can see this one kind of went sideways and then exploded up above the Gann 45 angle, then it broke underneath it. So this is a pretty high probability area up here to look for reversals, and you can see actually three reversals at that extreme level. And of course you can also use our statistical models as well. The containment bands, typically at the 2 and 3 level, you're going to get reversals. I use our very fast digital signal processing based one, and then we'll put a 3 on there just in case it goes past the 2. And you can see the 2.0 level is exactly where it stopped, which typically is what happens. You can also use our range projection tool. This shows you how far it moves every whatever period you want. If you want to use 5 minutes, 30 minutes, 60, but typically the 60 and the 240 are areas that you're going to get reversals at. And you can see that the pound yen was above the 4-hour average high. Great place to go short. And guess what? When you know you have a strong uptrend, after a pullback that goes to the 4-hour statistical low, because that trend's very strong, it's likely to find an area here. And when you combine all those tools, like I said, with our soon to be released GAN tool, you can plot the GAN from the previous swing lows up. And you can put the steep angles on there too if you want. And you can see that, and one of the things I'm planning on adding to this is extending the GAN angles for one extra swing, so you can kind of eyeball it there. That GAN angle from 1, 2, 3 swings ago, it's exactly where it found support. Now this isn't the biggest move in the world, but combined with our statistical tools and the GAN angles, very high probability. And I would bet that also the perfect oscillator is also telling you to look for a buy if you think the currency is strong. You can see at this level right there, it's underneath the -80 level, which again is a very high probability reversal area. Typically markets either go sideways or reverse when they're at the plus or minus 80 levels. See, plus 80, reverse down. Doesn't hit it that often. Plus 80 level, kind of went sideways. Again, if you know the trend is up, you can oftentimes, especially if it looks like a decent pullback and hits the lower band, look for entries as well. That's it for today's Forex blog. We're working on releasing a new version in the coming weeks, which radically does our tick data over. As soon as you load our software, it's going to save all the tick data immediately up into that second. Right now we do the same thing, but we always request data for today and usually yesterday. So that's a lot of tick data ordering, especially if you use some of our statistical tools that get tick data for 28 currencies. So that can cause a major delay in ordering the data, getting it in. Also, it takes up a tremendous amount of memory. So we're redoing that to do 1 day's worth of tick data at a time when we do analysis, so we don't have to hold all that in memory. It can, if you have a lot of charts up, cause crashes in the program. It was never really designed to allow you to watch every single currency with all of our most data demanding tick data requests. So that should radically improve both the stability of our software. It's going to increase the speed of loading. You should load, if you close the software and go to lunch, come back, you can probably load some of the most sophisticated workspaces in probably less than a minute versus maybe 5 to 10 minutes now. It should be 60 to 90% faster. And for people that like to have a lot of our tick-based tools up, it's going to be very, very fast and should not cause crashes. So we're hoping sometime 2 to 3 weeks we will release that. And the best part about that is in my development, when I constantly, probably 30 times a day, I make changes to the signals, I recompile it, and I have to load it again, load all the data again. And having to wait for 2 days worth of tick data can take a long time, sometimes 30 or 40 seconds. And it should load probably in 5 seconds because I just closed it 2 minutes ago. It's only going to have to order 2 minutes worth of data, not 2 full days. It's going to be radically fast. It's going to allow me to develop faster, and it's going to allow me to put tools that I use personally in my trading into the software. For instance, this buy right here is one that I use in my automated trading system. It's not in our release version, because if I put all that data in there, people add 8 charts to their workspaces, they're probably going to hit memory limits and cause crashes. I'm mainly trading euro dollar, pound dollar, euro yen, and pound yen. I don't have up 12 to 15 range-based charts, tick charts with all this data on it, which some people do. They get crashes, and then they waste my time trying to support them when the software is never previously supposed to handle that. So hopefully that'll allow me to give people exactly what I use myself. Every single one of the close to 230 signals I've put in the software. So we're very excited about redoing how our software uses tick data and how it stores tick data to your hard drive, how it loads it on a day-by-day basis, rather than if you ask for 6 days of a range chart, it loads all 6 days in memory at once, creates the range charts. If you have 8 or 12 currencies up, it takes a tremendous amount of memory, sometimes 1.5, 2 gigs, and it causes crashes in the program. So those crashes will not happen with the new version.